Aviophobia with infinite banking. Have you ever seen those nature films where they show an adult bird shoving its chicks out of the nest so they have to fly? It strikes me as strange because, the little birds are born with wings and it's their nature to fly, but they're hesitant to the point that they have to be forced to fly. The fear of flying is called aviophobia. The fear of the unknown is called xenophobia. Personally, I feel that the hesitancy or apprehension about employing the infinite banking concept to finance strategies is more like aviophobia because anyone just getting started with infinite banking knows in their head what it is and how it works, but not having actually done it before can cause apprehension. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. And in this video, I'm going to explain why you have nothing to fear about infinite banking or life insurance. And if you find this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. If you have questions, we have answers. For example, I've had over 125 hours of specialized learning in the field of life insurance. And that includes learning the various products, how they work, what they do, and even the laws that govern those products and protect the consumer. I've had at least that many hours of specialized learning about the infinite banking concept and how to apply it to various finance strategies. But even after I had tested out one application of financing with infinite banking with great success, I was hesitant to tap into it the very next time my wife and I had a perfect reason and application to use it with. It was just a feeling, and I moved ahead with using the strategy to finance our vacation. And again, it worked perfectly. And our cash values continued to grow as we spent the money on our wonderful vacation. But there was that hesitancy going in. So I understand the reluctance and hesitancy and feeling of uneasiness when a person is about to take the plunge, so to speak, into infinite banking for the first time. First, life insurance is a kind of unknown contract for most people. It has unfamiliar language and terms most folks have never heard before. So if your agent hasn't explained a term or something about the product or design or anything else you don't fully understand, ask them to explain it to you. And if their explanation doesn't satisfy you, ask again and keep asking questions until you are satisfied. And if your agent can't or won't explain things to you clearly, find another agent who will. Now, we're discussing infinite banking here, so we have nothing to do with term or universal insurance. Neither term or universal, including IUL, are good for infinite banking. Only whole life is suited for infinite banking, and particularly participating whole life with a mutual company. And then the policy should be designed for maximum cash value and growth by including certain cash-rich riders in the design of the policy. We have another video on this channel that covers the questions you should ask and the answers you should get when looking for an agent or broker to help you with getting the policy that is right for you and for the infinite banking strategies. For our purposes now, excuse me, I want to explain why you really have nothing to worry about with regards to whole life and infinite banking. First, you really can't lose much when you buy a well-designed whole life policy. You have a free look period of 2 weeks at the start of your policy, and that's a law. So if you decide you don't want the policy within those 2 weeks, let the insurance company know. They must refund you every penny of your first premium. A properly designed whole life policy will have at least 50% of your premiums paid into your cash value of the policy in the very first year. In most cases, my clients see 60 to 80% of their premium going into their cash value the very first year, and more each year after that. So if you decide you want out of the policy for whatever reason at any time, you can surrender the policy and receive all your cash value. In that case, you lose very little to the cost of insurance. And if you want out after 8 years or so, depending, you will get more back than you ever paid in premiums. No loss at all. In fact, a gain. If something changes with your finances and you want to keep the policy, but need to lower the premium, you can do that because the policy was designed with specific riders, the premiums for which are included in your total premium. You can reduce or eliminate the riders, and that will reduce the premiums. If you want to stop paying premiums altogether, but you want to keep the policy, you can do that too. You can exercise the reduced paid up option. We have another video that explains the RPU option fully, but for now, basically, the RPU or reduced paid up stops all required premiums and leaves you with the amount of whole life insurance that has been fully paid for up to that point. Hence, reduced, paid up. Now, you can't do that with car insurance or home insurance or any other kind of insurance. But whole life insurance is a very special product that offers benefits beyond any other financial product can offer. By exercising the RPU, you continue to have whole life insurance, a lesser amount, but still you'll have some, and you'll retain the full amount of cash value. Plus, both the cash value and the amount of whole life will continue to grow with the compounding dividend interest, even though you no longer have to pay any premiums. And here's the most comforting thing, in my opinion. Even though you may be paying more in premiums than what may feel at first to be comfortable, remember, most of your premiums are going into your cash value where it grows with high compounding interest, and you can leverage that cash value at any time for any reason without having another bill to pay on a monthly basis. That is, when you take the leveraged loans against your cash value, you do not have a required repayment schedule. You decide when and how much you will pay back to the loan. And if the policy is with the right company, you will be earning more dividend interest than you are charged in simple interest on your policy loan. So you're always coming out ahead. That's the beauty of infinite banking. So have no fear, my friend. Let me help you with your tax-free cash growth warehouse account, otherwise known as a participating whole life policy, properly designed for maximum cash value and growth, and for using the infinite banking strategies. and put yourself in the position to fly with the eagles, financially speaking. If you found this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. You have questions, we have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below this video here. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, the link to the application is also below. We're here to help. We look forward to helping you. Aloha and mahalo for watching.